On Tuesday, the US stock market extended a losing streak and plummeted to the lowest levels of September 20, so it was the second sharpest intraday fall in the last 10 days within the ongoing correction. The key stock indices opened the American session today with steep losses. All of them have already lost almost 2%. Notably, the sharpest losses were recorded during the reassuring speech by the Fed's chairman. Jerome Powell said that even though the US economy is ready for tapering stimulus programs, the labor market is still far away from full employment. For this reason, interest rates will be increased in the remote future. Perhaps the US stock market rebounded yesterday in response to these words by the Fed's leader. The S&P 500 shed 2% on Tuesday and dropped to 4,352 points. The index is expected to hold in the corridor between 4,320 and 4,390. Let's remind you that the ongoing decline in the stock market is nothing but a normal correction. The S&P 500 plunged only 5% from the highest level of the year. A much steeper decline is possible inside a common correction. Besides, investors entered the market with long positions on late Tuesday, so we will see a robust jump of all indices soon. The market might recover 1% or even more tonight. The US dollar benefited from the stock market slump yesterday. Its index surged to 93.60, the highest level since November 2020. Analysts do not expect large price swings for the index, which is likely to trade in the corridor between 93.30 and 93.90. Despite its impressive advance against the pound sterling and the yen, the US currency closed yesterday with modest gains. The euro, the main greenback's rival, looks confident, showing resilience to the dollar strength. Now traders are trying to puzzle out whether the euro will fall prey to the US dollar like the British pound and the yen did, or will the euro keep its footing. The bearish stock market is dragging down oil prices. Besides, growth in US oil inventories is escalating a slide in oil prices, which have already tumbled nearly 3%. Lacking support from the oil market and amid a broad strength of the greenback, the Canadian dollar lost ground as expected. The dollar versus the loonie pair rebounded to 1.2670. Analysts say that the pair is likely to trade in the corridor between 1.2620 and 1.2720. Bitcoin is still trapped in a tight range, creeping towards the anticipated target of $41,500. The news background remains positive for the crypto market that subdues buying pressure. Nevertheless, a trade volume is rising on the whole. The possible scenario for Bitcoin is a decline to $40,000 and a subsequent jump. To sum up, the correction is still going on in the US stock market. The indices are expected to leap sharply at the near time. Experts cannot figure out what market catalyst triggered a slump on Wall Street yesterday. The only convincing reason is growing yields of the US Treasuries, which have climbed above the psychological level of 1.5%. Yields accelerated growth in light of the Fed's statements about withdrawing monetary stimulus in the near future and a possible rate hike in 2022. In practice, the US economy is still expanding its national output, although at a slower pace than in a few recent quarters. That's all for now. Thank you for watching and stay tuned.